Good morning. It's February 3rd, and it's 2024, and this is the week of earnings. Magnificent 7 came out, and most of them didn't disappoint. All the ones in our portfolio did pretty good. Remember, last week we had to put up with the Tesla one. Let's get into it. And I did something a little bit different on the instead of some of the charts. I decided to go with the revenue and the profits. All right, the largest company for profit-wise in the country is Apple. $33 billion in the quarter profit. That's more than countries. $33 billion of profit in the quarter. Wow. It's like a bond, somebody said, you know. Beat, it first went up in revenues, 2.1. We don't own Apple because 2.1. It's lost 4 quarters in a row with revenue. Now it's starting to come up. Look at the iPhone. Holy smokies. It is just a huge chunk of the money. And the services, right there, 1/3 also. So a lot of money in Apple. But we're waiting for some other things. AI phone is coming up. AI computer is coming up. It's all going to be good, probably 2025, but not this year. There'll be some that'll come out, but not as much as people think they will be. Microsoft, in our portfolio, $21 billion of profit. Went up 17%. Largest company in the country. Largest company in the world. Profits and revenue went up. Azure, 28% up. That is a must portfolio hold. Holy, look at the streams of revenue. Azure, 24 billion. Office, 13 billion. Windows, 7 billion. There's a lot of money. And we've got gaming coming up. Remember, they bought Warcraft, and the new expansion really looks good. First one in years that I'm excited to play. Google, 20 billion in profit. You know, search is worth a lot of money. Revenues went up 11% in the advertising. Total revenues up 13%. That means, you know, YouTube and storage and everything else, the cloud, a lot of money. So, again, another one of our portfolio companies, and their last one. This company just killed it. Meta, $14 billion of profit, 50 cents a dividend per share. First time ever. Revenues went up 24%. You know, this is $1 billion company. It goes up 24%. People share reels. No matter like 8 billion people, 3.5 billion times a day. That's incredible. You know, this is a social media juggernaut. And, you know, he went in and, you know, he expressed sorrow about all the stuff. I mean, you know, the trouble is the kids want to be popular on TikTok and the reels. And, of course, there's this chunk of people who want to get exploitation, grieving, trolls, everything, you know, and it's just nasty. And I think it's better off, you know, if you're under 18, they should have the ability not to comment unless they're your friends. Then you add them, and then they can comment only, you know. Pretty simple 6, I think. You don't like them, you're not my friend, you can't talk to me anymore. Amazon, also in our portfolio, 10 billion. Now, they make this thing look small. That's crazy. But it's trying to show some comparison. Revenues went up 13%. You see the pattern? Over 10% on technology, consumer staples, all these companies that are, you know, tech-based retailers and things like that. That's the minimum. We want to have that. When we get into other ones where they talk about, well, you know, this is a good company, you want to buy it, it would be growing 10% because the top 4 of our companies are doing that easily. The indicators, oh my God, the commodities, down, 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 gold, oil, look at natural gas. I don't think I've ever remembered one below 2. Heating oil, I just put a chart of heating oil, and it's just up there. It's coming down to the lows again. Remember, the U.S., 13 billion barrels a day of oil. Remember, we only should be 9. Saudi Arabia's at 9. We got 4 billion out. There's a lot of oil out there. And, you know, it really doesn't matter what Iran wants to do because we can make up for it. And if you listen to the president of Chevron and Exxon, it's going to increase next year too. So it's on a lot of fire. The averages, S&P. Now, you have to go back. I did the end of January because I like the so goes January, so goes the market. And we'll talk about that at the last slide. But the end of January, up. So, you know, we only have February 3rd trading. Today, nothing. February 2nd, It went from 1.6. It got 2.4% in the S&P in 2 days. Wow. And of course, we look at the SPY. It broke out. That's a positive sign. JP Morgan's constant bear. They got him pulled off. He's going to be working with institutional investors. Because it's embarrassing. You missed this run, and you cost people millions of dollars, telling them wait in cash. The market's overvalued, and they've missed last year. We made 33%. These people sitting in cash, 5%. And you know what? They've lost 25%. That's 4 years of solid gains just in the market. So, you know, a lot of these people, you know, they're getting asked these tough questions. You were bearish, you sat out, you bought into bonds, and guess what? You got hammered. And, you know, I think it's going to be a good year because the revenues are growing. That's the key thing. If it was flat revenues, I'd be a different animal. So advanced micro devices, everybody wants to go in there and says, oh, it's the new AI. But, you know, it's not selling it. It's buying it. It's trying to make it. They don't have the contracts. That's why we got rid of Intel. Intel did not do so good. AMD's revenues rose 10%. It's not bad, but we're not buying it yet. I want to see the AI chips they want to make. I want to see one of the big companies buy them, and then we'll take a look at AMD. It might be double that by then, but I'd rather have the sales now than it is talking about we will make it. Lyondell missed. That was a surprise. You know, makes petroleum. You know, not petroleum, but ethylene and other compounds, and I was surprised. The revenues dropped. That's a big miss. Something's going on over there. I know the products are tough, but you know, when I compare Lyondell to Exxon and everybody else, the revenues are down because the oil prices are down and the prices of commodities are down. But it's a material stock, and then we're going to switch it out for Clorox, and we'll talk about why. ExxonMobil, again, I'm not worried about energy stocks. I think they're best in sector. They broke out over here. Them and Conoco, pretty good. You know, just making a lot of oil. I mean, I don't want to say 248 is a big set of earnings, you know, but that's pretty good. You know, they beat by 28 cents. That's not bad. That means they're doing well. Remember, as long as the oil is in the 70s, 80s, 90s, 100, they're going to make a fortune. You know, I always remember ExxonMobil, you know, back when, 2014, when they're the #1 most valuable company at like 500 some million, they were making $10 billion of profit a quarter. I mean, it's just ungodly amount of profit. And I think, you know, that's why they don't want to talk about a profit per quarter. SOFI came out, got a lot of people excited. It jumped up a lot in the first couple days of this week, and you know, it did good. Revenues went up. You know, this whole thing of the college loan forgiveness, you know, it's going to affect SOFI. You know, you just don't forgive the loans. If SOFI got the loans, SOFI's getting the money. It's just now you not get the money the way they think it's going to be. But they think upside's coming up. That's always good. We've been in and out of SOFI. We're watching it. It's in the mid-range, so if you want to get into it, it's not a bad price. Look at all these things. It's got an upward slope, a downward slope. It's been a downward channel. You know, so the question is, which is this line? I'd like to see this get to a wedge, and which way it breaks out is the way we're going to go. Nucor, everybody always loves Nucor. I like Nucor. I like the management of Nucor, but the revenues in the steel are telling you the economies worldwide is not up yet. And, you know, it's in the upper end of a channel. It broke out, then break back down. But, you know, I always look at it. You know, it's a good company. It runs good, but steel, it's going to have overcapacity if China does not get on board, which we don't know when that will be. You can predict it all day long. Supermicro is a company I'm not, you know, I kind of heard about. I didn't really pay attention to. But I got the earnings, and I about fell off the chair. 100% revenue. Look at this chart. Holy smokes. We could have bought this thing in October for $250, and it would have doubled our money. And then I says, okay, let's go dig what's in there. They've got a partnership since 1993, NVIDIA, doing the AI training applications. Remember, you got the nice $100,000 chip. It doesn't mean anything if you can't sit there and make it do anything. This is a company we want to get into. It's one of our top AI picks, I think, once I start to dig in it. Be nice to come back down here at 350 to get it. Will it come down there? I don't know. You know, you got to remember, this is a parabolic run. I mean, we have gone from middle of November to jumping up quite a bit. So I don't know if that's something we want to buy at this price. You know, what is a good price? I would like to get it at the top of this range. I would like to maybe even get it down over here at about 350. But it is a company we are going to get. We want to watch it, and when it does drop, for whatever false news, fake news, low forecast, again, I don't think the revenue is going. If they're going with NVIDIA, they're going to ride the NVIDIA boat, and they're going to do well. So I think it's a company we want to get into, and maybe we'll just sit there and ease in, 1/10 of a month, and eventually after 10 months we're in it, But something to think about. Pfizer, we picked it as one of our biotech 10. Remember, in a very small position, 1/10 of a position, and revenues. Oh my God, this thing has been going down and down, and where I'm not too worried about the percentage-wise. It's still not even below 10% of loss for us because we bought it fairly low, but it is an issue. They've got to right the ship. I mean, my God, there's nothing to replace Paxlovid and all the other COVID stuff. I mean, they've got to have something. They're going to have to buy companies or something. They had all this money, so they have money, but man, I would never buy this stock on this chart other than if we just picked it because I think they're going to get it around. I mean, if you can invent the vaccine and the treatment, you can do other things. The talent is there. General Motors, we watch the auto because Tesla is our manufacturing pick. I don't want to call Tesla a technology company. They sell automobiles for the revenue. They were up 3.5% revenue. GM fell. So just waiting to see Ford. I still think Tesla's going to be the #1 auto. We got all the other stuff that people may think it'll go up and do, but remember when we got in a lower price. Of course, Tesla's doing death cross right now, and that's a different issue. But we're winning. It's down 26% of the year, and again, we're watching it. We're about even at it, but good time to buy if you're going to get into it. Walmart 3-to-1 split. Holy smoke! This market's liking that. And after February 23rd, so a lot of time to get in there. So we're going to get 165 maybe. It'll be $50 some a share, and that's good. And you have 3 times as many. And it's, I guess, an unexpected split. I was thinking if it got like to 300, it might split, but it's good. It's been in this range, but the range it's slowly going up. I like this 200-day moving average. That's a nice steady rise. That's what I like in stocks. Steady rise. EQR or REITs, went up 4%. That's good because I'm always worried about commercial collapse. I go in and I see all these vacant buildings and stuff and dead space and advertisements, and boy, you got to be on your game to sit there and make some money in real estate. So, and of course, New York Bank is going to have problems. So, not good. Next tracker, I'm bringing up these other stocks that we don't have because I want to just tell you at least I'm watching them. Next tracker, 38% revenue jump. Of course, the street loved it. It jumped. It broke out of this channel. Provides solar tracking software. Now, solar stocks have been the heck beat out of. Here's a company slowly growing. So, will it come back? Sure, it's the solar stock area. So, but I think they're doing good. And like I said, 710 million is not a small little amount. So it's doing well, and obviously, there's a lot of solar out there. Novo Nordisk, one of our stocks in our portfolio for the diabetes drug Ozempic, which they can't make enough of still. It's not as bad of a shortage as it was in the summer, but it's incredible. So as you can see, the earnings came out. Sales in North America, 50%. Now I sit there and you think about all the things in there. We saw that one with Supermicro. This is like a tech company selling the hottest. But look at this. Could this be a $200 stock? Yes, I could envision it. If this revenue keeps on jumping in the United States, we're going to be up every quarter. Is it going to be up 50% next quarter? Whew, this thing is smoking. So, this is one of the few times when we see a 50% revenue drop and it went up like 5%, you might want to get in because I don't know when you're going to be able to get in. The stock is in an upward channel. It broke out of the channel. It'll probably come back to the channel, but you want to ease into this stock. It's not a bad time because the numbers are there. The NASDAQ, another one we watch, 21%. That's not bad for a stock exchange. And again, this is a good example where the news is good and the stock sold off, which is sell the news type of thing. But, I'm always looking at this thing and I says, earnings are good. They beat, here's our 200-day moving average. So you're getting a stock that went up 20% below the 200-day moving average of the a year ago, which is not bad. So something to think about also. Everybody tells me, why don't you get into Broadcom? Well, because Broadcom only grew 4% revenue. They've been focusing on the AI capacity. Focusing. Just like Intel is focusing. Just like other companies are focusing on doing. We want the AI revenues now. We're seeing it with our top companies. So yeah, it's got a great chart. It's expensive as blazes. It's over $1,000. I mean, you know, you could have got it $600 way back here. But man, I tell you, a company growing 4%, you know, that's why we're not an Apple. We want at least 10% if we're going to get in there. And then Clorox, we switched it for what we call Lyondell, and again, revenues rose 6%. You know, Dow didn't do so good. Lyondell didn't do so good. This is one of the few companies in the materials sector that is actually growing revenues. There's going to be a chlorine shortage supposedly from South America, so that's going to add into Clorox's profits because you can raise prices when there's a shortage, and so raised EPS. So that's what we want to see. I like the word raises EPS guidelines above consensus. And Merck is in our portfolio. It's been here for a while. And look at this thing. You think this thing was a tech stock? Holy smokes! Getting up there, jumping out, beating the thing, and now we got to make a new chart eventually because it's way above the 200-day moving average. Rose 5.8%. Got a good drug pipeline. It's going to be good. The Fed and the job. We believe our policy rate is likely at its peak for this tightening cycle, and that for economy to evolve broadly as expected, appropriate to begin reducing the policy rate sometime this year. Everybody wants March. It may not be March. It may only be 1-2 cuts. Who knows? Just look at it. Inflation is low. The jobs. Look at the jobs. If we go back, way back from 2004, this is a good economy. You know, a good economy. 2.1% inflation is a target, but I'll take 3 and great job numbers. These are pretty nice. You know, Reagan used to use the misery index. What's the inflation plus economy? This is like, you know, 5.8. That's, you know, or not 5.8, but, you know, 6.7. It's nice. So, you know, something to think about. Let's take a look at the heat map for January because this is all important. This is the January, end of the January numbers. So goes January, so goes the market. 87% of the time it's accurate. I'll take anything 87% of the time that I'll win. So you want to be in the market. Yeah, maybe we'll get that 1 out of, you know, 1 out of 13 chance that we're, what are those, 1 out of 12 chance or 8 chance that it doesn't work. But Glenn Catcher talked about the AI8 and is NVIDIA, AMD, TMC, and AVGO. Oh wait, cross off AMD, put Meta in, cross off Broadcom, put in SCMI, Google, Amazon. Those would be the top stocks, I think. And we own every one of them except for this SMCI. And we might just nibble in it. We'll just start getting into it. And, you know, if it drops 40% when you only put a tenth in, it's not as bad as if you put a full amount and drop 40%. We don't want to lose any money, but, you know, the question is what's the fair value? And that's something I'll have to dig out some more numbers in here. But this was a good January, and it was good. We sold BNRS and the Lyondell. We bought Clorox. Longer report this week because we have so much earnings. I'll see you next week, second biggest week also, and have a good week. Stay warm.